Welcome back to the channel. Very, very important stream today. I'm here with Paradise. We're going to be discussing what is happening with the crypto market, giving our opinion as to how long we think that this bleed will last for, talking about some of the major charts right now that you need to be paying attention to. And I think it's just going to be a productive conversation today, planning what we're going to be doing for the next little period in the market here. Paradise, welcome to the stream. It's blood on the streets recently. How are you feeling?
Yeah, fine. It's blood on the streets for a lot recently, so kind of numb to it now.
What are you seeing on the Bitcoin chart? I think that's the most logical place to start before we get into any sort of discourse surrounding alts.
Yeah, a bunch of thoughts on it. I got a few Bitcoin charts to go through, but this is just the key monthly levels on the monthly time frame marked out. Just look at this from like a support resistance type view. I think that everyone's waiting for this consensus level down here to be hit, and you kind of almost don't want it to, in a sense. You kind of want it to be front run if there is demand in the market for it. But I think it's the next logical place to look. Price is now trending down on every time frame. So even on like the monthly, effectively broken market structure too. So I am waiting for like something down here. Effectively, I'm looking for some sort of bottoming around here, maybe trend a bit and reclaim some high time frame trends, the noodle or something. But so this is just a high time frame perspective for support resistance. I think last stream with you, I was going on about this gap needed to be filled. That's before we started puking into here. We're not quite filled it yet, getting close, but you can see like the obvious support resistance regions kind of line up exactly where the gap starts to finish and the high volume nodes start. So we can also look at that for like, this is what I'm looking at for potential bounces bottoming, and then we can also look at it from like a volume profile perspective. So looking at this in the weekly, this is just the volume profile pulled for these two consolidation ranges. And price is kind of, this is established fair value, then fair value, and price is like sort of in an imbalance at the moment, and it needs to seek one side. So potentially looking for it to come down here. These levels kind of line up with the ones I just showed you on support and resistance, those monthly levels, but a bit lower. So effectively I'm looking for one of two things. Two of two things. Either we come up here, maybe some sort of retest of value there. If we can't reclaim it, we can look to like trade back aside. I think it's going to get a big chop range in here effectively. And the other kind of thing I'm looking at is price to come down sort of in here. Maybe look at a value area high retest, some sort of bounce. Maybe we can target like the mid range of this like gap fill. Maybe we can target back up at prior value, or we can look for like deeper retraces into like the range POCs. Of each. So it depends on direction. It's kind of diddling in the middle at the moment.
In the middle, yeah.
So I'm thinking like, it's good for traders. I've been trading a fair bit intraday, just using screeners and bots and stuff, just finding opportunities where they are. But mostly I think like for probably many followers of this channel, people are investors or long-term investors or spot traders. So I think if you're in that boat and you're sort of tearing your hair out, wondering you're going to miss the bottom, wondering if you'd be de-risking stuff, I wouldn't really be doing any business in here. I'd be looking to do business up here or do business down here. And that can pretty much translate to, if you're not using value areas and stuff, which is fine. Sorry, volume profiles. You'd just be looking at like the monthly levels that we lost. So up here around 93.5 or down here around 71.3, give or take. And, we also have like a fair few nice POIs in there. We've got weekly demands here, the origin of the impulse up. We can look for something like that. Now, this is where I kind of get conflicted on it. This is one strategy, going between value. So going between that chart I showed you before with the two volume profiles. But my other is obviously using the noodle. And my strategy in trending markets is to bid noodle retests when you get a nice stochastic reset, some sort of SFP. Currently getting that right now. So
I was going to ask you about this actually, because I was also seeing this on my chart. I was going to ask you about this noodle retest as the noodle expert.
You can see like how many times the noodle has held historically on the weekly. It's just formed a base every time there. It's held it really well. Even down here it wicked through, didn't really close below. This one too, wicked below again, didn't close below it. We're kind of getting the same thing now. And each time we got this, you're getting a really nice stochastic reset. I find stochastic resets are really good on higher timeframes like the weekly, the 3-day, and the daily. So we're getting exactly this right now. And I can't remember exactly how the vibes are on the timeline down here, but I know it was like, cycles over, peak capitulation. Kind of getting that here again. Maybe people need to be more scared. I'm not sure. So this weekly closing is what I'm watching for, but I kind of have two systems talking against each other at the moment. One's range-based, one's trend market-based. So, we are effectively trending down, but this is giving a signal to long. So I don't know. I'm actually playing this just low time frame at the moment. To go to,
and that's the thing, right? If you don't have an edge, like if you have conflicting data, sometimes the best thing to do is nothing. Like at the end of the day, no position is a position. So you don't need to try and force a trade and force directionality. Like only in this market, like wait for super high confidence setups and then go in with conviction instead of trying to like force a trade here. Because I could see both scenarios. I could definitely see a short-term bounce because we have dropped a lot, and that would make sense. And especially on a lot of alts, I think there are short squeezes on the table because funding is, started to tick really, really negative. But at the same time, we are in a downtrend, and just respecting the trend, we know that 70K is like the next key support, as you pointed out. So it wouldn't shock me if we went there either. And that's you kind of have to operate on that base case when you're positioning in the market right now.
And if you're trading, like the higher time frames are all trending down. There's no disputing that. But like, there's nothing to say you can't take counter trend trades in lower time frames. Monday range strategy is one of my favorites. Like every Tuesday, I look forward to the close. I can mark it out. You can see like this. It's a 4-hour time frame here. This is a pretty decent consolidation range. It's been going sideways since trending down. We rated this key low yesterday. We got a sweep of the low again. Sorry, on Monday. Got a sweep of the low again. So that Monday low was printed. We got a sweep of it. It was a really nice bullish divergence print at the same time on Awesome Oscillator and RSI. And then that's pretty much trended up and now left basically equal highs just below the Monday high. So I can definitely see us tagging some sort of point of interest in here. Maybe it's actually, this demand right here, right now is lining up with the 1 hour noodle. Maybe we actually bounce here in EU session, maybe into NY, even though that's been dumping every day, and just take out this at least. So, there are counter trend trades to be taken on lower time frame. This is on the hourly, but then if we look on higher time frame, I think on the daily is what I'm watching for. That untapped high is also a daily imbalance, a daily FEG. And that's kind of where I'm looking to potentially take a short. So, take a long from the Monday low up to the Monday high. You can flip short because you have a high time frame point of interest there. And then potentially some sort of move up there and then targeting down here. Not quite sure yet.
This is a very good market for low time frame traders because there's so much news and volatility that's being triggered by Trump at the moment that like it really is traders heaven and investors paradise. It's kind of been that case for a couple of months now, because it's kind of hard to get a high time frame directional bias when we don't know exactly what's going to play out on the Trump front. Like basically to summarize, I did a video on this 2 days ago where I break down the macro variables right now in a lot of depth. What's happening is Trump is basically trying to engineer downside in markets. He's trying to force Jerome Powell's hand to cut rates, but to do that, he needs a weakening labor market. He also needs to lower the bond yields. So in the short term, it makes a lot of sense for him to come out, make these rash comments about tariffs, try and push the US dollar lower, but also push the markets down as well. And then potentially later in the year, we see a little bit of a pivot where the market's weaker. So Powell is basically forced to cut rates, maybe leading to some sort of quantitative easing or at least easing liquidity conditions towards the end of the year, which could result in a bigger rally for markets. That's kind of my thesis right now, that we see a continued downside in the short term, then chop accumulation, which goes into expansion, probably some point either at the end of summer or Q3. That's kind of my rough feeling at the moment, just based on what Trump's doing and the current macro data that we have, which is kind of interesting because, and I've been saying this for a while, I think the 4-year cycle is over. So I think when people talk about, we're now in a bear market, okay, technically we're in a bear market, obviously, but that doesn't mean it's going to be a 2-year bear market or a 4-year bear market or anything like the past, just like the bull market didn't last as long either. And it was slightly, maybe arguably left translated. So I think what's definitely a possibility now is that markets just react to liquidity conditions. Markets are responsive, especially risk on assets like Bitcoin, to global liquidity and to changes in rates. So when we do see that shift occur, we'll also, just as aggressively as we've shifted bullish to bearish, we'll shift back bearish to bullish. So I think people have to keep that in mind, that we're just in this phase right now where the market is following the macro conditions. That at some point will change. And as I said, I think that could be in the summer period, and then we actually could see quite an aggressive run again. And alts are basically front running Bitcoin, and Bitcoin front runs equities. So you have to keep that in mind as well. Like basically, longing alts is like longing 50x leverage tech stocks, and that's why they're so like sensitive to changes in market conditions. And this entire move to the downside has been the market responding to changes in market conditions. And it's exactly what Trump wants. But I do think longer term, the reason I'm not like structurally bearish for months and months and months and months and months or years is because longer term, I think Trump wants markets to do really well. I think his family and him have a vested interest for crypto to do really well. They just have to do so whilst balancing his objectives, and that's to bring manufacturing back to the US and strengthen the US economy. And to do that, they need a little bit of weakness in the short term so they can actually lower rates. Because if they just keep pumping the dollar, pumping markets, pumping everything, there's going to be no leeway for him to achieve his final objective. So just keep that in mind, that we don't operate in a vacuum, and all of this is part of like a bigger plan. And if you want more info on that, go watch my last video. I'll leave it in the description if you're interested, where I go through all the macro stuff. But today we'll keep it a bit more technical, and we'll talk, maybe a bit more lower time frame about our plans.
Yeah, no, it's a really good point you made about looking a few months down the track. Effectively, if you're just using a simple trending indicator, well, this is just the money noodle that I use. But you see when we finally had this massive sell-off, pretty much end of the cycle, and then we started to find this bottom. This is kind of what we're having now. We're having these like extreme sell-offs, so like accelerated sell-offs, and they have sort of hit a climax, they range for a bit, they have a reversion bounce, and they dump again, so on and so forth. You can see we kind of had that pattern down here, like climax of selling, then we ranged down there, ranged down again, and then we kind of stopped the selling. Then it was just like a very clean range that developed here. But I think what's going to happen is, just pretend this leg here is what we're experiencing now. We'll get some sort of reversion bounce, and then we're going to range for probably a considerable period of time, maybe a few months. And eventually, like if you're sort of, like I said before, tearing your hair out, wondering if you're going to miss the bottom or whatever, like I think a good amount of people out there would be better off just buying strength instead of trying to like time a low. You can see here on the noodle, we were just getting smacked down by it the whole time, around 2022. And then, September 2022. Kept hitting our head against it. Eventually we flipped it. It was a couple of weeks there of just waiting for a retest of it, which would have been tough. Eventually got like the perfect retest and pretty much shot off. And that was what I would say was the beginning of the bull market, the bull cycle that we're currently sort of in, whether you believe we still are or not. It just lines up with classic price action. So really nice breaker here. Origin of the point of breakdown when it dumped like the main lows down to 15K. And as soon as we got a flip on a higher time frame of the noodle and, in line with price action, that was kind of where you could have bid spot instead of trying to buy every up candle in a downtrend. I see this kind of happening with people time and time again. People have this idea that, like, maybe you'll disagree with this, but people have this idea of they're just DCAing the whole way down. Like every sort of bounce, they might buy here, they might buy here. Like, okay.
No, I hate this because whenever I've done it, I've lost money. It's happened to me recently on a couple of coins, so I agree.
Yeah. I was educating someone in the group about this the other day. I was saying, when you're longing every up candle in a downtrend, this is not DCAing because maybe eventually it hits a bottom. We get a bottom range down here, but to break even, your DCA average is up here. You might need like, a few 100% to get back there if you're lucky. Yeah. The way I've been instructing everyone to sort of DCA is to wait till this stops. So we have that downtrending price action, and then we form this range. And you can do like one of two things. So you can either be buying, I'm just going to finish this. You can either be, averaging. This is a proper way to DCA, in my opinion. It's just to buy as close to invalidation as possible. So you're just putting in bids every time we hit the range lows on spot. Or if, maybe you're building big purchase position, whatever. Or you can be that person that buys once we break out and get confirmation, just like we saw on the thing with the money noodle in here. This is a big range. We broke out, we retested it, and then we shot off to new highs. So whatever you're comfortable with, maybe people are comfortable like bidding the low and expecting price to go up from there. I'm more of the B type person. I never really, I want to see strength. So I'm happy to buy, 10% up, 20% up on a break of the range. And then quite simply, like if price comes back, does the classic deviation, goes back inside the range, gives like a bearish back test the range high, you can almost cut exactly where you bought, or you can just cut on a close back inside it. But this is the way to DCA if you're doing it right now, not just trying to long every up candle in a downtrend. And I think that
this is huge alpha, by the way. I spoke about this on the AMA yesterday. Like this is so important what Paradise is currently talking about. I'll give you an example on a coin like Bio. This is just like, a random example, but I thought that the chart looked good. So like, let's say like you're really bullish on DeSci. Like Bio is the leading DeSci coin. What's happening right now is we're seeing a cleansing. So all of the bad coins are basically going to keep bleeding out and they're going to go to zero. The good coins, they're going to form these accumulation ranges like Paradise is talking about, and they're going to end up being the ones that explode to the upside when the market goes back on risk on, which we know it will at some point. So this is actually a very important period, because by looking at the price action of altcoins over the coming months, looking at which ones actually form that base and don't make lower lows will give you a very good indicator as to what the strong coins are going to be during the next run. Because what you're looking for is demand. You're looking for an actual contingent, a holder base to buy a coin. And that reflects by a key support level being respected. Importantly, what you're also looking for are sellers having exited the market. So you want a signal from the market that there's no more selling. That's very important, because price can only move up once all the sellers are exhausted. So like Bio, for example, this is in a downtrend. I wouldn't buy this here because there's no signal the sellers are exhausted. Like it keeps going lower and it, doesn't have big moves to the upside. So that's a signal there's no real buyers for the coin. But if it starts to reach this phase, like Paradise discussed, of chopping, now there's a sign, and probably won't be that long because I'm on the daily, but now there's a sign, right, that there's no more sellers, or the selling is limited. Most of the selling is now people just trying to, recoup underwater positions, and that there are actually buyers willing to step in. So the reason fundamentally why the strategy Paradise outlined is so important is because it signals two things. One, there's buyers willing to step in at a certain level, and two, the sellers are unable or they're exhausted, so they can't push through that major support level. So on alts, what you want to look for is an accumulation phase for probably a matter of weeks. It even could be a couple of months, where you put in a clear low, you bid that low, you have invalidation below the low. And if you end up breaking to the upside of a range, then you can obviously take a much bigger trade. So I think just having that framework of only bidding alts after they've gone through that accumulation period, that is a very, very, very good framework, because it's going to stop you from catching a knife on alts. And subsequently, you're also going to increase the likelihood of getting into a strong altcoin, which is going to have more upside, because the coins that have more upside during the next leg are the ones that have less sellers and more buyers. So that is really the approach I'm going to be taking in terms of accumulating alts. And yeah, I just wanted to give a little bit more nuance to what Paradise was discussing, because I think it's so apt right now in the current market. And if you can nail that, you'll get some really, 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 really good entries for the latter part of the bull market, or the new bull market. Because as I said, I don't think we're in a 4-year cycle, and the market will come back again. And you want to be in the right coins for when that occurs.
Well said. That was good. Yeah, I mean, effectively, right, we're not going to, I've said this on a few streams with you now, but we're not just going to come down here and tag this prior range high breakout and just make new highs. There needs to be like a lot of demand for this to happen. Effectively, what I'm expecting to see, like the daily noodle has been a phenomenal barometer when price is trending. Obviously, it just chops in the range, but that's it's a trending indicator. But on the daily, it's been a really good one. It's respected both above and below. What I'm kind of expecting is the noodle to come down, start to flatten out. And in that time, price can fight with its resistance. But this is that range accumulation I was just drawing out down there. And then once we sort of start to get above the noodle, start trading above it, even if you don't take a trade for the next few months, you could effectively just wait for this. Once we get this, that's your signal right there. Or you can be that person that's buying all the retests down here. And the good thing about buying these low retests here is, just like the range high I showed, if it closes back inside the range high, you can cut it basically where you bought it. Just like here, if it's building for a while and you're buying all these range low retests, it's effectively the old range high that we broke out of. If we start accepting back inside, what I mean by accepting is not wicks. Like, these are all wicks below a level. So there's a level here. These are all wicks. Once you finally get a body close through, that's kind of your acceptance. Like price is accepted to trade down there. So, if we start getting back below here and accepting, then you can cut your trade. Your thesis is wrong and you've only lost a couple of percent. Effectively, you've done smart buying and accumulation at the bottom of the range that forms. I think, this thing people keep doing is like, I'm DCAing because I'm buying when there's a dip. It's like, yeah, but the dip can keep on dipping far more than you think. And this is a mistake I've made in like past cycles. Obviously, everyone
It's been a painful lesson so many times. Even this cycle, like there are a couple coins, even this cycle that I've kept buying into, which I mean, eventually I think they're going to come back and I'll end up making money, but I can save myself the short-term pain of having to hold underwater bags by just waiting for the right technical signs, because it's very unlikely we're going to get a V-shaped reversal. So you have time to wait for these setups to play out. And as Paradise said, if you need to buy a little bit higher, you can buy a little bit higher, but at least then you're getting more confirmation as opposed to getting in on a falling knife.
Yeah. I went to cash December 18, and I've not deployed a single cent back in the spot yet. Even here, I was considering it. I put it in the group.
I wish I went full into cash in December 18. I was like end of Jan. That's when I went really like, okay, this is looking bad. I'm going heavy into cash, and that's when I was stabled up to like 50%. But man, a month earlier would have been great. Would have saved me.
I didn't go full. I went about 60% cash, and then over a month after that, till about January 18, I went up to like, I think about 82% now. And stuff I have left is just old Pepe and C pool from like September 23. So still up in profit, but it doesn't look great. But I've sold most of those off. But yeah, I've no real reason to play anything yet. I did consider this. Like, we shot straight back up in the noodle. Once we rejected it, had this immediate like engulfing back down. That was a trigger for me to say no. The thing is, right, like if we had flipped the noodle there and accepted above it, I would have bought spot back. And people would have said, oh, but you could have bought down here. You're buying so much higher. It's like, yeah, but if like the trend is to shift here, trends to shift like that, and we start trending back up, and we go up to 160K or whatever, I don't care that I miss this little skerrick down here. I care about just catching the meat all the way up to the main target. I think that's why some people, price action traders, they're just obsessed with catching Pico lows and tops. I just don't really find any glory in it. I think
it's like a clout thing. Yeah, it's like I nailed the bottom, I nailed the top. It's like no, just make money. Like, isn't that not what matters the most? Just make money.
Yeah, you want to be right and you want to make money. That's right. I think like as trend traders, you never catch the top or the bottom. You catch like the meat of the move. Maybe you're lucky to catch 60 to 70%. That's like great, because you might miss all this. Get on board here. Price trends all the way up. Eventually, we start ranging. Then price starts to go down. We start to lose trend there. That's when you can cut your trade. You're never catching the peak or lower top, but that's fine. You're still making good money, and you're trading in line with the trend. So you're not buying and holding underwater unnecessarily. But yeah, I think we get an extended period of this, to be honest. And that's fine. That's good. It's a time to like skill up and build stuff. You can do your research on what you want to buy. Even if we don't get down to these range highs that we broke out of just yet, maybe this is a range we trade in for months. We don't know yet, but it's quite possible that, we do rotations up and down. This is a great place to trade, and you can be buying your spot each time, and maybe get some deep sweeps into that level and recover back inside the range. And you can take another trade back up to the range high. This effectively could be like a good few months of trading just between these 2 points, if this is a new range we establish.
Let's talk about what you just said. You said this is a good time to build. I want to elaborate on that point, because I think what's going to happen now, and we're already seeing it, is a lot of people are going to drop off out of the market. A lot of people, just because you've lost money, you're going to quit. And even myself, since November, my net worth is significantly down. Like, I've lost money over the last couple of months overall. However, the knee-jerk response shouldn't be, oh no, I've lost money, I'm just going to F this shit. I'm just going to go away and feel sorry for myself. The response, and what I'm really focusing on, is actually building and getting better. Now, for me, this could be upskilling, building my businesses out, focusing on things that are higher leverage. For you, it might be something as simple as learning to trade, because if your downfall was your inability to take profits or invalidate on investments or trades, then a very easy low-hanging fruit thing you can do to make yourself a much better trader when the market next rallies is just to learn those things and learn a system. Because you can get defeated by the market, but what you don't want to do is get defeated by yourself. So what's happened in the market has happened. Like the losses that you've incurred, they're losses now, they're gone. But you have a choice now going forward as to how you respond. And you can only control your actions every single day. So you really have two choices. You can give up and say, this isn't for me. And I think for some people that's fine. If you're not cut out for crypto, you're not cut out for crypto. But if you really want to see success in this space in the long term, I think the best approach is to consistently try and improve every single day and compound your skill set. So the next time there are major opportunities in the market, and even in this market, there are opportunities, you can really, really, really capitalize. And that's pretty much what I did throughout the bear market in 2022 and 2023. Like, obviously, I'd lost a lot of money. I'd round tripped over $1 million back down to like a few $100K at one point. But then I just compounded my skill set and I built it back up. And then when the market started running in 2023 into 2024, I made a lot of money really quickly because of my learnings throughout that period. So it could be something as simple as just learning the basics of how to trade. And I know Paradise has been spending a lot of time in the new Traders Hub that we've created in the Mars High Club to actually help people learn how to do this. In fact, maybe you can run them through Paradise what we're actually doing, because it's actually super, super, super cool.
Yeah, sure. Gotta pull up Discord. Can you see Discord?
I can. Maybe just make it full screen though, because it's like half screen. Yeah.
Cool. The Traders Hub is something I've been working on with Morin. He's another analyst in here, Trader Morin. You can check him out on Twitter. The kind of thought process was, I was watching lots of people, because obviously lots of people join the group for miles because, they're value investors and not traders or whatever. But I was seeing a lot of them round trip because they were not familiar with market structure, when to cut trades, when to sort of, reassess if they should be in them or not. So the whole idea was, let's create a hub with exercises. So, that's the first step here. Basically homework for people. We've got a lot of education recorded already, but now we're putting that in and setting homework based on it. So if you go to Morin's, it's something like, identify low time frame divergences on RSI and AO. Show me, and I'll tell you if they're right or not. People reply, and Morin sort of gives them the thumbs up or down, and then it's forcing people to backtest and get better. I have similar things. We're just building more and more every day, but it's just all sort of review stuff at the moment. It only just launched 2 days ago. But the purpose is, like, we give you the okay that you're doing it right, and then you sort of go out and learn to backtest yourself and come back with your results. And the only way to sort of get better is backtesting, forward testing. If you don't want to have skin in the game at the moment, that's fair. But at least be backtesting.
Imagine if you had done this. Just ask yourself. Imagine if you had done this, and obviously we didn't have it back then. Mars High Club wasn't even out back then. But let's say in 2023, before the bull market of 2024, if you had learned how to use RSI, support resistance, how to create watch lists, how to track wallets, how to identify relative strength, money noodle indicators, etc. If you had all these tools in your skill set with my alpha, for example, because we had a very strong edge, especially in September, October, November, imagine how much more money you would have made. Even myself, honestly, like if I had a little bit more technical now, because I'm more fundamentally driven, I think if I went through all these exercises, even I would have made a lot more money on my own alpha during the bull. So the entire period of the entire point of these periods, these slower periods in the market, is you actually now have time, because you're not distracted by the crazy market, to go and learn these things. And the reason why we've laid it out really simply in Mars High Club is to make it very easy for you to just go step by step, learn skill by skill by skill, and get reviewed on it. And every single day we're dropping more homework. So every single day you have a very clear path to leveling up. And then we're actually launching also a trading course with modules, but that's going to be slightly later. What we've done first is we've rolled out the Traders Hub for people. But I think this is probably the best value add we've added to the Discord pretty much ever, because this is just such an easy way for people to now learn to trade and be accountable to themselves. And these skills are going to come in handy. I mean, now we're already getting lots of low time frame opportunities now, but especially during the next crazy period in the market, you'll wish you had the tools in your skill set to really maximize and milk those periods. And the way you do that, it's funny, it sounds counterintuitive, but the way you milk the good times in crypto is to build aggressively during the bad times. Whether you're a business, whether you're a trader, whether you're a VC, it's the same. Everyone that really succeeded during the bull, they had to use that bearish period or the sideways period to acquire those skills or to invest if you're a VC or a long-term value investor.
Yeah, I mean, a lot of people came in. I mean, every cycle, people come in. And my first cycle was the same. Come in, you just throw money at anything, and you generally make more money, and you think you're pretty good at it. And then the tides shift, and you realize you didn't actually have any sort of edge at all. This is kind of why we designed it. So when there's not much to trade, or when you should be trading less, sitting in your hands, waiting for like A+ setups or better opportunities, just better conditions. The point is to upskill like relentlessly, and then when conditions are good again, you can capitalize tenfold on what you were capitalizing before. Because now, even if you only learn basic market structure and support and resistance and position management, position sizing, when it comes to the crunch next time we start a downtrend, you'll be able to cut and actually take profit where you should be taking profit and not round tripping. But just to carry on from before, the exercises are there. We're building those. This only got released 2 days ago, so this will be filled up with more modules soon. Resources, this is just stuff we've collated, different tools.
We just don't want to overwhelm people with modules. We could launch 100 because there are 100 things to learn, but it's best that every day or every week you learn a couple things, you get really good at it, and then you can build and build over time. Show them, I think, the best part of the trading hub, and that's maybe not the best part because this is also good, but the alerts, because I actually found a trade yesterday just on the daily alerts, which made me 17% on spot, which was decent in this market, and it's a really cool tool we've added.
So, probably a bit of a long explanation. I have these bots in my personal server. A friend built them. He's got a really good platform. And I've been using this for the better part of a year to find trades. So basically, I've got alerts. I've worked with him to custom build that pertain to my individual system. So a lot of them are like money noodle bounces or ejections or whatever. Obviously, you're not going to find them anywhere because it's related to my indicator. But basically what this does, it scans the entire Bybit and Binance watch list, which is over 500 assets, every hour, every 4 hours, every day, every 1 day time frame. And it basically looks for certain criteria to be met. So, on this last scan, where are we at? On this scan earlier today, so it found on the 1 hour what was bouncing off the noodle, EMA 200, bullish sweep and FVG. So that's one of my bread and butter setups. You get an SFP into an imbalance. You get a reversal trade. I actually took one the other day as soon as the bots were open on ladies and got like a 2.3R within an hour, which is really good. But what we have is we've refined them. We could have 100 different alerts here for every type of EMA or whatever, but it's just analysis paralysis. I'm always a fan of less is more with everything in life. But this basically relates to every analyst we have in the Discord. I just added these specific alerts for that. So the noodle bounce obviously related to me, same as the bullish sweep and FVG. The EMA 100 and 200, that's related to Doc's trend system. So his daily and weekly trending indicator. So we now have, something scanning through the entire watch list looking for that criteria so you don't have to do it. I've got RSI divergences, going to add awesome oscillators, going to add the unicorn setup, which is basically like a 4x pattern where it's a breaker inside an FEG. And just the best part of it is you can not really have to scan charts, because what I used to do was pull up the entire Bybit watch list and I would start at the top and I'd just be going down looking for opportunities on the 1 hour, on the 4 hour. And I'd be doing that a couple of times a day. And you don't know how much time that takes. Like I got pretty good at the end. It would still take me an hour to get through the whole thing. Now this literally just does it for you and it spits alerts out and you can just, choose whatever. And if we go to the Trading Talk channel, which has been, it's a new paradigm.
Probably the best channel in the Discord. Everyone's.
Yeah, now it's so busy, man. Like everyone's just helping each other. And people that are really showing. Yeah, man, I'm loving it. And people that are showing promise in here, they're getting promoted into the talent channel. So now they have their own sort of feature channel, posting their own setups, their own criteria, their own outlooks on the market.
So that's great. So basically the Trading Talk channel is just for everyone to talk, share setups, get setups reviewed by the analyst. But then if you're really good and you have a track record, we promote you into a curated channel where people can scan the best talents trades. That's very cool. It's like a scouting system for traders.
It's good. Well, it's all just community focused. Just the whole goal of this is to build a community where everyone feels included. It's not. We've got a lot of channels. Obviously, we've got a lot less now. It's pretty tight, but there's not much dispersion. Like people are coming in and helping each other and hanging out. And a lot of the exercises you'll see there's either back testing or team building. So the team building ones is effectively, here's an exercise, and I've told people to go out and join up in groups, and they go through and they basically all contribute their own watch lists. And then there's a big index of wicked watch lists that everyone's built in their own, or spaghetti charts. You can, do it for whatever. So people are basically working in teams to do things and then providing what they have, and whatever they provide, I'll end up putting into the resources for everyone to use. So it should be like a sort of self-fulfilling prophecy. Everyone upskills and then they use the resources and then they sort of gain more skills from that, like a perpetual motion machine.
And then everyone gets better. So then
Exactly.
the cumulative calls in the group get better because everyone has more skill, and then it becomes like a higher value community. So I can see this could be really powerful in especially 2 to 3 months. Once people kind of nail the basics, you just have this community of everyone that just is really on the money. And then like, even the analysts, you and Morin, you won't even have like as much pressure to teach people because you'll have all of these like people that are really equipped that know strong trading systems that can teach other members. So then it becomes a place where like anyone that wants to trade, that wants support, has 24/7 support and 24/7 setups.
Yep,
So it's very
exactly.
cool. Very, very cool.
I've actually been getting taught stuff myself lately. Someone was back testing something the other day with the money noodle that I didn't even really clock. And they pointed out like, when RSI, I won't go into it, but basically when RSI is in a certain spot and it relates to where the money noodle is, it was actually kind of good. I went and used it myself after. So people are picking stuff up and using each individual system from each analyst or just blending them all to make their own sort of Frankenstein system. And it's good. I like to see these unique sort of things come out of it, unique styles come out of it. But yeah, it's an ongoing thing, but I'm looking forward to building it more.
It's very, very cool. All right, where do you want to? How do you want to end this? Because I don't want to make the video too long. Maybe let's look at stocks and I think we finish on equities because that's kind of what's driving markets right now.
I think we could have honestly just left it on BTC, but all the charts I've been going on about for a while are just doing the thing. So DXY is one. I was interested in this for ages. I was talking about this on a couple of your streams in the past. Once we deviated, if this was a deviation, once we accepted back in the range, I thought this would be really good for risk markets. Problem is, this came into the range and I got happy, and then NASDAQ and whatever started to tank. So we'll see. We have broken market structure on higher timeframes on a lot of these things. Define your market structure. Maybe this is the low. Go on line chart or whatever. I was actually on the daily when I was doing these things.
I like the line chart sometimes. It's nice to change things up.
It's much better for market structure because it goes on the bodies. It calculates the bodies, not the wicks, and the wicks just get messy.
Yeah.
But so which one was it? I think it was SPX. Weekly, yeah. Basically bearish divergences. You can't really call this a bearish divergence in the RSI because it's too long and it also reset the 50 level, but just diverging, like waning momentum against price for a long, long time. And SPX does nothing but go up for like, a decade straight. But at the moment, it's doing one of the classic pullbacks. I was actually comparing it the other day to past ones I've had. They're all kind of relative in size. They're all around 10%. Some are a bit deeper than others, but ballpark. We're roughly in the early double digits. We're kind of hitting that right now.
10. Yeah.
So maybe we see some sort of relief soon. Maybe this could correlate to one more puke with BTC diving into that prior range high in the 70Ks. Don't quite know, but it's not good for risk markets when this is happening across pretty much everything, right? The NAS 100 is
honestly, we need this though. Like it's longer term a healthy thing, and Trump knows this, and that's why he's trying to do this. Like we kind of need this reset. So basically, like the plan is bring down equities a bit, bring down the dollar, bring down bond yields, lower rates, bring manufacturing back to the US through the tariffs, and then basically incentivize better terms of trade. And ultimately, that'll probably be good for the country, but there's short-term pain trying to achieve Trump's long-term goal. So it could be there could be further downside on the S&P, but I don't think this is like a 10-year bullish structure to 10-year bearish structure shift. I think this is a longer-term bullish structure pullback. I don't think the macro triggers behind this are necessarily driven by some big global collapse, which should structurally change directionality for many years, like 2007 or 2001. I think this is a little bit different. It could lead to that moment in years, but I don't think we're quite there.
Yeah.
Just my opinion.
No, I agree with it. I think in regards to crypto, if you're not even following trad markets, it's just going to be a war of attrition, really. I think a lot of people are constantly just trading leverage in here. Maybe they're not so good at it and they're chopping themselves to bits. eventually we're going to have a climax. So we get a big puke. I think, maybe bigger than this, maybe a sharp sell-off down here. This is where the people who haven't been over trading, who have been sitting in cash, who haven't been like blowing their money, just trying to catch every up candle and downtrend, they'll be able to pick up what these people puke at like phenomenal prices. And still, we're going to get this like...
That'll be me. I really want more long-term Bitcoin. I've kind of been holding off, but if we get some big nasty wick, I would definitely be a buyer.
Yeah, well, that's what I'm going to do too. I'll probably more like once it forms a range, I'll be looking to scale in wherever that range may be. It might even be like down here somewhere. There's nothing to say we can't get back down here. Like effectively, monthly structure is still held down at 52K, even though people will disagree with this. But we could get back into this range shot for a bit. Wouldn't want to see it. But
the reason I don't see it happening is because that would bring us back down to levels prior to the mass institutionalization of Bitcoin. So, I mean, it could, structurally speaking, but I mean, so much positive has happened for Bitcoin. Like you now have Texas approving a Bitcoin strategic bill, which could potentially see them buy $500 million of Bitcoin a year. Other states are now pushing for that. We have a strategic reserve. We have the most pro-crypto administration in history. We have BlackRock and, retail now heavily focused on Bitcoin, wealth managers recommending Bitcoin to clients. So we have a passive bid, which has never been there before. Like, I just can't see, maybe it could happen on a wick, but I can't see us like settling that low yet, unless there's like some crazy bear market. But
wick is what I was thinking.
My view on it.
Yeah. I think probably we potentially find, I'm not going to say a bottom, but some sort of bottoming structure, like, in here. But what I was saying about war of attrition,
fundamentals are better than ever for Bitcoin. I'm sorry, they are better than ever. So like, if you get 50, 60, like it's ultimately a gift. I see this so much higher than 100K, like so much higher than 100K.
I think 60 would be a phenomenal opportunity if you got it.
It'd be a $500,000 asset one day. $1 million asset. It just takes time. But the last 6 months have really turned the tide for, I think, how crypto is viewed from an institutional and sovereign lens. Like massively, massively changed. Like there's pretty much a war right now. You can look into it. Ask Grok. Grok's been a very handy little AI tool I've been using recently. But China, there's a war between China and America to be the home of Bitcoin. China's like actively very, very involved. It's not spoken about much, but these aren't countries that are bearish on the asset. These are countries that want to scoop up as much as possible. So it's an interesting kind of war going on, almost to see who can be the home of Bitcoin. So I for that reason, long term, nothing to worry about at all.
And funnily enough, both nations are run by egomaniacs. So yeah, it'll be an interesting battle between them for that. In terms of like getting down into this zone, if we do, I'd be looking at that POC, the old point of control of this range, like the biggest volume sort of transactions. 63,000. If you can set bids there, stink bids, maybe you get lucky. I think that'll be a phenomenal opportunity. What I was saying before about that war of attrition thing, it's just you against yourself. Kind of what you were saying, Miles. Like trend starts to flatten out, comes down, downtrend ends, we form a range. People still chop themselves to bits in here. I think the smart ones just accumulate slowly and then buy any sort of breakout as a confirmation. Maybe get your average entry up a bit, but I'd say just don't overtrade at the moment. I've dropped my trading down by quite a bit. So maybe trading, not sure, like just A plus setups pretty much now.
I think people that are in the Discord and not checking X every 5 minutes are actually feeling pretty comfortable and feel like they have a grip on things. I think where you start to lose a grip on things is where you let all this outside noise in, like constantly listening to opinions, intraday, like X is just, even like YouTube, it's a bit better because it's long form, but just like limit your news sources, limit the amount of time you spend in low quality environments, up the amount of time you spend in high quality environments. So like good groups with good men, it doesn't even need to be Miles High Club, whatever you think is a high quality environment, just be there and focus on that and lower your information sources because it's not as bad and it's not as disastrous as Twitter would have you believe. And it's not as good as Twitter would have you believe on the green days either. So just like, yeah.
I think lower your information sources anyway, even in a raging bull market. Like having too many alerts come in is just detrimental. You just don't make a decision because you've got so many contradicting sort of.
Yeah, it's crazy. In the bull market, there's so much noise.
I pretty much stripped out my Telegram. I've stripped back on all the notifications on Twitter. I've left a bunch of Discord. So now I've just got like a really tight feed. I'm just the sort of cream of the crop, and I won't look to like add to that. I think I'm good for now. Analysis paralysis is real, like especially in crypto, because everyone has an opinion and many of them aren't right. So choose wisely.
And it's not opinion based. This is the thing that pisses me off sometimes about the space. It's not opinions. Opinions are opinions. What matters is probabilities. So like, oh, I think the market's bottomed here. That doesn't matter. What percentage likelihood based on the data is it of bottoming? I think right now maybe like 50%. So like you don't have an edge. So like everyone's opinion is just totally like arbitrary. It's better to look probabilistically. Like I think there's a 70% chance that the low's in, and even then you're still not operating under that pretense. You're waiting for signals to like verify that, and you're trying to enter a trade when that probability number is as close to as 100% as possible. So absolute opinions in a market that doesn't operate absolute, that operates probabilistically, just make no sense. But obviously, you know, on Twitter, I get it. And I have opinions, so I'm guilty of this because it's fun, you know. But just because everyone has opinions doesn't mean they're right or they're wrong or you should even trade on them. It's just what it is, an opinion.
Strong opinions, loosely held.
Yeah, it's good. Good summary.
That's the meme I keep seeing on Twitter lately, which is pretty spot on.
Yeah.
Everyone has strong opinions, but no one really sticks to them.
Yeah, I mean, I'm even the same. Like, I might have a very bullish bias for a couple of weeks, and then I might see something that I don't like, and now I'm bearish again. And that's not flip-flopping. That's because there's new information, and you'd be an idiot to ignore new information. Like, imagine when the tariff news started to break, and like you were like, oh no, it's just rubbish. That was at like 95K, and now we're at 80, and alts are down another 50%. So like, you can't ignore that. That's why I've kind of been bearish on the channel since the end of Jan. Like, it's not flip-flopping from bullish in November to like suddenly bearish. It's just like there's been a lot of stuff that happened since November. There's been the Trump meme launch. There's been a lot of liquidity that's been sucked out of the market. There's been like the deterioration of the trenches. There's been a structural macro shift. Trump's been a lot more heavy-handed with the tariffs and this kind of plan to tank everything than maybe the market expected. Like everything gets priced in real time. So you'd be an idiot not to change your bias based on new information. That's why I hate those comments. Oh, you're flip-flopping. You were bullish a few months ago. Now it's like that's your job as a trader and investor. You can't constantly 100%. Be one thing or another. Yeah. You'll just get rinsed.
People always cop hate in the timeline for that, but like it's ridiculous to call anyone out in it. It's stupid to be a perma or anything, perma bull or perma bear. You need to adapt. Basically, I just literally just use market structure. That's why I recommend to everyone just to learn basic market structure. Even if you're just a value investor, you can save yourself out of losing a lot of money by round tripping stuff. Or, you know, let me give an example. If you just pull up a line chart here, you could have long Bitcoin down here somewhere. Here was a higher low that was made. Actually, it wasn't a high that was broken. Let's give a better example. Oops. Effectively, on all these like higher lows that were made, right? You can just effectively trail your stop manually up. And when that's broken, you can effectively just cut it and look for like a new break in structure. I think it's where a lot of people round trip where they're holding stuff. They could have bought BTC in here somewhere when we broke out on the Trump news. This was the bottom that was established. We never quite closed below it on the weekly. And then eventually when we finally did, wherever that candle close is, immediately it was down here. So it's quite a big weekly close, but this would have been where you cut effectively on the close. Or
we also had the wick that took us back up for that underside bearish retest. So
yeah, you could have de-risked there. That's the thing.
Yeah.
So everyone should just learn basic market structure. Just when lows are broken, like take profit. There's no problem in taking profit. You can always buy back in. I think a lot of people, when they catch wicked spot entries, they're terrified to sell because they got such good entry. It was like, there's nothing to stop you buying again when the trend is proven to be going up. So yeah. You can pretty much leave it there, though.
Yeah, I think we ended on that. Thanks very much for joining again. We'll run this back next Wednesday. And yeah, always great to have you on the channel. Always a nice level-headed discussion. And hopefully people got some value today.
For sure.
We'll see you guys in the Discord. See you later.
Peace.